From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, this is the COB, all the stuff you need to know in the day in business and markets. My name's Kyle Ryder with Danny Akuye, and Danny, the omen has been broken. Normally the red shirt means a red market, not today. We're 0.5% higher, which is
It does, but
which
it
is
depends
good.
on which sector you looked at, because quite frankly it was a bit of a, to use that word that is used quite a lot these days, a bifurcated market, wasn't it?
It was. Well, maybe we can get straight into that, because it really was the materials sector and energy sector that pushed things high, and I think that's part of one of our major themes today, which is really this sort of hope springs eternal when it comes to China's economy and any kind of rumblings we get out of the policymakers over there about the prospect of more stimulus. So, I mean, I think that run higher for the market really can be pinned just basically on that.
Yeah, so the Politburo did make an announcement, as far as I can work out, last night, our time, but it's a bit scant on details.
Right.
Yes, acknowledging that there needs to be some stimulus, acknowledging that the property sector has a few problems, but I'm yet to find out any actual concrete measures. So I guess that'll come out in dribs and drabs maybe over the course of the week.
We should hope at least, but there's a lot of news elsewhere in the world. US tech earnings tonight, tomorrow morning our time. Microsoft, Alphabet, and there's a few other non-tech names reporting as well, so it's going to be a big week.
Huge.
But I think fair to say we'll be watching those pretty closely as well.
Indeed, and also companies like Visa, which might give us further indication in terms of how the consumers, holding up. I mean, there's just so many companies reporting, we couldn't possibly mention them all.
Not them all. The one I'll also be looking at, just 3M, sometimes a good proxy, along with Caterpillar as well, around sort of that global industrial story.
Yeah, so, and those stocks are running again.
Yeah, so there you go. And central bank watch, we're not there yet, but still we're speculating what could be. Fed, ECB, Bank of Japan at the end of the week. I think a lot of investors probably keeping to the sidelines until there's some more clarity around, both the earnings as well as central bank developments. But let's get across the sectors today that we were watching. We already mentioned the miners.
Yes.
And some broad-based gains, it has to be said.
Almost rocket emojis.
Almost rocket emojis. Yeah, for Fortescue above $23 a share. So it's been a while since it was above that level. At least months, if not
those
maybe.
Those Dalian iron ore futures, the September ones, are up to $190 a metric ton today. So the punters are definitely in there with hope springing eternal. Let's just put it that way.
Absolutely. South 32 bouncing back after what was a bit of a dip yesterday. But let's get to the energy space on that note, and performing rather well as well. The coal stocks doing well. Coronado's not there, but 3 of the top 5 yesterday were coal stocks. Whitehaven, New Hope were amongst them, but broad-based strength in energy as well. So the Woodside, Santos and Ampol all pushing higher. Where was the weakness? Well, the retailers consumer discretionary, I should say, were amongst the worst.
And
performing.
Infotech was also at one stage. Really? Yeah, at one stage that was a little bit weaker, although I think that recovered a little bit into the afternoon. So Infotech down about 1/3%. Looks like the REITs down about 0.6%. Healthcare down about 0.5%. Consumer discretionary, which I think you were alluding to, almost down 1%, which is not really surprising, because it's really a rotation back into our cyclical stocks, China exposed.
Yeah, absolutely. And we have seen the odds of a rate hike next week push up to about 0.5% over the last few days. So
inflation tomorrow.
And CPI data, which we'll get to in a moment, of course, too. There was some corporate news today. Newcrest fourth quarter gold output rose for the quarter. Improved construction at its flagship Cardium mine in New South Wales drove the rebound. The company subject to a $26 billion takeover, obviously. The stock sold off last week after Newmont did report. Allkem is also getting a loan of up to $180 million to develop a battery-grade brine lithium plant at the Sal de Vida site in Argentina. So we'll keep an eye on that one. An interesting dynamic, actually, we were talking about with Josh Gilbert yesterday from eToro, just the influence that this kind of nascent futures market in China for lithium is starting to have on our stocks here.
Oh, really? I didn't even know there was one. That's embarrassing.
Well, no, neither did I until he mentioned it. But it's kind of, it's starting to sort of drive the price action a little bit more, because we're getting a little bit more...
So it's a bit like Dalian iron ore futures.
Well, it's sort of, just fundamentally the market's more transparent and efficient now. So the stocks can track the underlying a bit quicker. I think that's the sense of things. Which takes us to more corporate news today. Core Lithium obviously reported
Lots of
activity
downgrades there.
There was Citi lowering its price target, Macquarie doing the same. Goldman's also noting that things were disappointing, and the broker has put a sell rating on it, cut the price target to 75 cents. Morgan has cut its price target to 75 as well, retaining a hold rating. Last but not least, Live 360 was also in the news, and that was a broker rating Bell Potter actually upgrading the company, which is a little bit out of cycle, I suppose. Getting a lot of downgrades recently, raised the price target to $9.25.
Indeed, and there was only another interesting one. Domino's was downgraded by Goldman Sachs, and that stock was being sold down quite heavily. That was off by, 5%, 6% at one stage. Joe just felt the share price was discounting too much optimism of a turnaround.
Interesting. And actually, here's the stock of the day. It might have been a little bit up your alley. Of course, Nadine was the presenter.
I have mad paws.
Well, you like your animals. Have you ever thought, kind of like an emotional impulse buy of like the Mad Paws stock, just sort of in solidarity for your four-legged friends?
No.
No, I don't even know really what the business does. But nevertheless, it was our stock of the day, so maybe you can tell us.
The report was encouraging in that their sales are increasing. If you look at it last year, or the last full 12 months report, they lost 10 million on 9.8 million in sales. So I would have thought that was a fairly big gulf to bridge to actually get to profit. They're also talking about EBITDA, which what Charlie Munger and Warren Buffett call bullshit earnings. And I know that everyone uses them, but the reason they say that is because it's like saying taking off tax, taking off appreciation, and we take all these expenses out, we're breaking even. I know it's a legitimate measure, but what really counts is when do they get to a point of actual net profit or profit per share, which then you can bring a PE into it. Then you can start looking at what the future holds. If I pay a certain amount for it, what's my return likely to be if I have some visibility on what the profitability is? But they're not there yet. So for me, we couldn't. I don't have an opinion. I think their sales are encouraging. They've jumped up solidly, and but until they get to profit, there's no interest to us.
Let's just sit back and wait. The times when I say this, it was a long time ago, 2021, you were rewarded for taking that sort of risk and getting early into businesses like this, which have the potential to build into something special. But we're at a phase now where the market well and truly is saying, let's take that seat back, let's make sure that growth can continue, you can tip into that inflection point of sustainability and profitability. And after those runs are on the board, that's where we'll step in.
Okay, so there's the view on Mad Paws. Did they sell you on it?
No.
No. Well, it's a $37 million
I don't think they're
stock.
sold on it either.
No, not really. But let's perhaps maybe with a tongue in cheek get a view from our guest for the day, David Lane from Ord Minnett. Mad Paws as a stock, has it ever made its way through your filters, David?
I have to say it hasn't. My daughter Georgia keeps putting pressure on us to get a pet, and I've resisted that. So, yeah, it hasn't really come into my frame of reference as to yet.
No, I can imagine.
Fair enough. But let's move on. So it's a really big week, isn't it? We've got the Fed meeting, we've got the ECB meeting, we've also got our inflation data.
That's right.
Do you think we're going to get any real surprises coming through out of these?
Oh, look, I think if we are going to get some surprises, it's going to happen in the next couple of weeks. We've had the US market 11 consecutive days in a row being positive. I think that's the first time for many, many years. And it really seems as if the market all of a sudden has forgotten all of the potential issues that could go on. We are still in an environment with high inflation, potentially higher rates again, not only in the US, but around the world over the coming weeks. And as you mentioned earlier, we've got the US reporting season happening at the moment. Australian reporting season is about to start. It'll actually kick off tomorrow with Rio Tinto reporting their interim results, and then right through August there'll be a lot of reports coming through. So yeah, I think we're in a bit of a phase where the market doesn't appear to be worried, yet there's a lot to be worried about. yeah, we're definitely very cautious heading into this reporting season.
Sorry, just
Go on,
one
Danny.
thing. No, I thought it was quite interesting because apparently Mike Wilson from Morgan Stanley, who he called it tactical buyer on the US markets in October last year, but then he sort of said, no, take profits this year.
Yep.
Really worried about an earnings recession, like he's been one of the bears along with Mark Kolonovich from JP Morgan. So
Sure.
apparently Mike Wilson is even backtracking now, which was always like for them to capitulate. It's, you know, quite challenging because and it's always at that period
Yep.
when everybody is kind of becoming bullish, all the investors are bullish, we see the VIX come down and then
Yeah, that's right. And even our own head of asset allocation, Malcolm Wood, has been very, very cautious and negative for quite some time. He is still cautious and still concerned about the risks, particularly in the US. But a lot of the data that has been coming through has been making Malcolm not necessarily change his view, but become a little bit more comfortable with the environment. And you know, technically, as far as the economy is concerned, and economic theory is that with rising rates and rising interest rates, that we should be getting rising unemployment. But that's the part of the economy that continues to stay very, very strong. And yeah, it's making a lot of the traditionally educated economists scratch their heads and maybe rethink their economic theory.
Yeah, absolutely. What about just what's going on in the materials space, particularly the miners obviously leading the market higher today? There's just every time some positive rumblings coming out of China. It's enough for investors to at least buy the news in the short term. Are you feeling more confident on the miners at the moment, or how you see things? Because like you said, we've got Rio reporting half year tomorrow.
They are, yes. We're again probably on the sidelines with the large miners, the BHPs, Rio. We've got hold recommendations on them and think that they're probably fairly fully priced at the moment. We are again concerned about the outlook for China, not just short term, but medium and longer term, and really think that China has a lot of structural issues, and there's been a lot of talk that potentially they're on the brink of a Japan-like decade where you know that they really are going to struggle. So obviously the market was excited by the potential that there might be some more stimulus there, but as you said, that the Politburo didn't really have much in the way of detail. So I think in some respects the market is getting a little bit too excited about the potential of China roaring back to a 10% growth, whereas I don't really think that's necessarily going to happen. So yeah, we're probably more positive on some of the other miners. We think that copper has a lot of potential globally as far as the renewable energy and EV theme is concerned, so probably more favourable as far as the copper miners. Even gold is coming back into the frame as well.
Indeed. Now, one of the sectors that really has been a little bit devoid of love this year, both in America and over here, is healthcare.
Yes.
And it's funny because I listen to all the strategists and everybody loves healthcare. Okay, we know CSL had, you know, the downgrade, but it's largely FX related. There's a little bit on margins, you know, going on there.
Yep.
At what point are our beloved healthcare stocks going to come back into fashion again?
It's a great question. I don't have the answer to that, but I definitely think that there's a lot of value there in the healthcare stocks, that not only in Australia but in most countries around the world, they've got demographics in their favour. We've got an ageing population. There's new technologies coming through in healthcare on a regular basis. So yeah, we think that there is value in some of those, particularly the you know, Ramsay Healthcare, Sonic Healthcare, those sorts of stocks. And then at the smaller end, we think that there's some value in a lot of the radiology companies, Capital Health and Integrated Diagnostics are a couple that we like in that space as well.
Interesting. What about lithium? Just because we have seen a bit of increased volatility over the last few days, and you know, it's inevitably an area of the market that overshoots the upside or downside, depending on wherever sentiment is at the moment. But I mean, do you have a sort of a view at the moment on you know the space in general?
Yeah, the space in general, long term, we think is is a good space, and that there is, or there will be, a lot of value created over the next decade or so, as far as lithium and battery metals in general. But as you said, there is a lot of volatility in that sector. Today we saw Pilbara up about 5%. Most of the lithium stocks were up very, very strongly. Allkem was up 2.8%, Sayona up 5%. So, there is a bit of excitement coming out of China about the intent for China to become the world's leader as far as EV is concerned, and locally we like a number of those lithium stocks. Allkem and Sayona in particular are a couple of that we like, and then we also like that EV theme from an Australian. A reshaping of the car market, and one of those that we like is Eagers.
Yes.
And then the government has given a lot of tax incentives as far as the novated leases. So we like Fleet Plus and Smart Group in that space as well. So I think as a theme, there's definitely a lot to unpick there.
Yeah, that's interesting indeed. But David, it was great to have you on the desk, of course. Before you jet off once again, we'll hopefully get you back on soon in person, or at least over Skype. David Lane, AutoNet, thanks for your time.
My pleasure, thank you.
Okay, let's get to the leaders and laggards, shall we, just to see where everything is wrapped up and where the dust is settled for today. Monadelphous, was there any news there?
Yeah,
I do have to write the market
contract.
commentary this afternoon. It'd be great to know.
Yeah, they've got a new contract. So that was that one. And what else have we got there? Pilbara Minerals, that we've just been... Yeah, so they've got the construction contract with Albermarle. Speaking of lithium, the largest lithium producer in the world. So it's approximately 200 million associated with the expansion of the Kemerton lithium hydroxide plant in southwest region of Western Australia.
There you go, Monadelphous at the top of the charts today. Looking through very much that materials theme we spoke about, Pilbara, like you said. Let's go to the laggards now, see what is there. ML Payments, another one which I'll probably have to check.
Domino's
it's in
down
the news.
5% after that downgrade.
Indeed.
From Goldman Sachs, and I'm not sure what's going on with Mesoblast.
Yeah, interesting one on email. We'll keep an eye on that because I can't find any news just publicly on that one. But anyway, worst performer of the day, Mesoblast down 6.2%. You just mentioned Domino's as well. Kogan.com, maybe in that retailers thematic too. We did talk about how that was one area of weakness today in the market. But let's look at the leaders and laggards in the small cap space. Nothing that jumps out of there at me necessarily, although AMA up 26%, so that's pretty tidy. See if we can find any news on that one. In the meantime, we'll just shift over to the laggards as well. Seems to be some news in terms of AMA actually. Let's see if I can just pull it up. No, can't see it.
No.
Anyway, moving on. OneView Healthcare, biggest laggard there, 8.75% lower. All right, let's quickly touch on what is coming up overnight. We've already spoken about it a little bit, but I think, some important US data, but Microsoft, Google will probably be the...
after the market closes.
Well, after the market closes, that probably set us up for tomorrow, I'd say.
Totally. Yep, absolutely. They've got some big shoes to fill, to put it mildly.
Yeah, big bar to try and exceed. But let's go to what's ahead tomorrow. And of course, it's that CPI figure out of Australia. Some production updates as well. Beach, Iluka, Min Resources and Rio's interim results. That CPI figure, expectations that I've seen for core is around 6.2%. Had Paul Bloxham on the Big Picture today saying that he thinks it'll be 6.3. It'll be enough for the RBA to say.
And that's 11:30 tomorrow?
11:30 a.m. and we will cover that on the Big Picture too, for what it's worth, tomorrow morning. But indeed, we get at 6 something. It's a pretty good chance the RBA goes again in August, but we'll just have to wait and see. In the meantime, that'll do us for another day, Danny.
Indeed.
All your news and interviews on your website and app. There's plenty there for you to digest. But in the meantime, have a lovely evening and we will see you tomorrow morning.
Bye.